Welcome back to Switzer on Australia's business channel. When the Reserve Bank makes a decision or a non-decision on the first Tuesday of the month, I get the Treasurer from ING Direct, Michael Witts, to read between the lines for me. So what does he see today, and could it have implications on the budget next week? And could the budget have implications for the Reserve Bank's decisions in the future? Michael Witts, thanks for joining us.
Hi Peter, how are you?
Have you ever lived through a budget period as it seems controversial? Like I know I can remember Keating days and stuff like that, but this seems really huge, doesn't it?
Well, it's sort of like if you soften people up expecting the worst, then whatever you deliver will be better. And I think that's the process that they're going through.
And I'm hoping for that. I've got a suspicion that the economy has been a little bit spooked by the conversations over the last month or so. Do you get that feeling as well?
I think so, and I think this afternoon there were some consumer sentiment details out.
ANZ, Roy Morgan one,
Yeah, that showed that consumers are concerned, and rightfully so, the fear of the unknown.
Yeah. OK, we'll go back to that later. As I say, my most important job for you is to tell me what you read in that statement from the Reserve Bank today.
I think the Reserve was a little bit more pessimistic on things.
Yeah.
They seem to overstate the decline in the investment, or restate more heavily the decline in investment spending relative to previous months.
Mining in particular, wasn't it? Yes.
Right. And they also talked about monetary policy being accommodative, and also then further said that monetary policy will continue to be accommodative. So that tends to suggest that, particularly in the context of the budget, that rates are going to be lower or at current levels for longer.
Yeah. OK. And I haven't even noticed some people who were hesitating about retreating from there. We might see one more rate cut. They seem to have got a little bit more conviction in believing it. And I don't think it is. I think we're on hold for a while. But those who think a rate cut is coming, after they read today's, they're a little bit more confident they might be right.
I would say so, yeah. And you could certainly interpret that. Our view certainly is very much that rates are on hold. The debating point, initially we were expecting November. Gut feel most probably says it's more like February.
Yeah, OK, into the 2015. The inflation number we got, it was a TD Security inflation gauge. Have you worked out how reliable it is as a... I know that you want to bag another fellow financial institution or a fellow economist, but the reality is it a good gauge for what the official does?
I think generally it's been tracking a little bit above the official rate.
Yeah, I thought that.
And like inflation is not an issue in this economy at the moment, so that one can be put to bed very easily.
OK. People listening to us, I can see people at home say, well, do I fix my rates now, or could there be another cut? What's your view on fixed rates?
My view is very much that you need to take a mix of both fixed and variable rates. And what we've certainly seen at ING Direct is that an increasing number of clients are actually doing that. Yeah. They're taking 60–70% of their loans on a fixed rate basis and the balance variable.
It reduces the impact of any increase by either half or 6/10 or something like that. OK. And I guess the bottom line is that if we get this strong growth in the rest of the world, well, fixed rates will go up with the stronger growth, won't they?
Yes, that's correct. Yeah.
OK.
Because in that scenario where you've got a stronger world economy, and if the budget does the right things and doesn't sort of derail the economy too badly, what you'll see is that domestic rates will start to move up as well. OK, so let's go to the budget, because there is a really close link, I suspect, to the Reserve Bank's decisions in the future as well. If this budget turns out to be as aggressive and as tough as some of the media headlines have been, what do you think the Reserve Bank's attitude will be? They will be very disappointed, I would say, because they have nurtured the economy to try and engineer the transition from the resources boom to a more balanced growth. Yeah. Deficits are not a dirty word. They both start with D, but it is not a dirty word. There is perhaps too much of a preoccupation with budgets per se. It's more the calibre of the budget. Is it in recurring expenditure or is it going into investment? At the moment, we should be putting it into investment. Yeah. So recurring expenditure is the sort of stuff that doesn't really generate anything in the future. It's just sort of, if you have too many public servants doing too many inefficient jobs, that'd be recurring expenditure. Money that has to be spent every year just keeping the government operating with no necessary output, no net benefit to the economy. And that's really that's what people really should be focusing on, is the composition of the deficit, not just the headline number per se. Michael, when I go to assess the budget, I'm going to be looking at
well, what's the impact going to be on total demand in the economy? Because until 2 or 3 weeks ago, I was really happy with the kind of recovery I'm seeing. I know the budget's been a little bit negative on confidence, but I'm hoping that this budget actually surprises people, that it actually could be a little bit stimulatory, despite the fact there could be some tough measures inside it. That's what I'm hoping for. If they achieve that, and we get nice growth as a consequence of it, what do you think happens to, what kind of growth levels do you think we can get to this year?
I think sort of if everything works to plan, I'd say 3%, a little around about the 3% level.
Which is long-term average, isn't it?
That's right. And I think in relation to the deficit and deficit measures, the most important way to decrease the deficit is actually through growth, not through cutting. So if they cut too much and that derails growth, then your deficit is actually worse. So this is the balancing act that they have to achieve, is maintain growth, maintain the projection of growth and the momentum of growth, because that will actually help the budget position.
A couple of years ago, when Wayne Swan first started talking about trying to create a budget surplus, it was at a time when I thought the economy was quite vulnerable. It was a time when I was picking on the Reserve Bank for having interest rates too high. You might recall the time.
Yeah.
I recall that even when John Howard was Treasurer way back in probably late 70s, early 80s, before before Hawke and Keating got in, he actually went for, I think in 1982 or something, he went for a budget surplus at a time when the world sort of forced a recession upon us, and he ended up with a much bigger deficit. And so for the right reasons, he chased the surplus, but he ended up with a deficit. Is it possible if they go too hard, they might end up with a bigger deficit rather than a reduced deficit?
Well, yeah, that's what I was saying previously, is if they get this balance wrong, what you're likely to see is that actual growth will be lower. And when growth is lower, unemployment is higher, company tax receipts are lower, personal taxes are lower because of the employment effect. So as a result, the budget could actually end up being worse.
Given what you're seeing, I know you're focused on the Australian economy, but you have to have a global feel for what's going on. And I talked to Tom earlier about those US job numbers. What is your feeling about what's going on in the global economy?
It's interesting. If you look at the US, a variety of US indicators, a lot of them are back not far away from their pre-GFC levels, which is a fairly compelling argument, that the US economy is fine. There's no major dramas in that economy.
And they got a very good services sector number overnight, didn't they, as well?
Right, yeah.
And that's the biggest employer in the economy.
Yeah, together with the growth numbers from, the employment data from last week, it paints a picture that the US economy is not only going very well, but the Fed is actually managing the withdrawal of the stimulus very, very well.
Yeah. So it seems to me that we're on the doorstep of a pretty good year, because the global economy should help. Even if China comes off the boil, the US is a bigger economy, even though we sell more to China. It's great that the momentum of the global economy can improve. But if we hit too hard in this budget, it could actually just take away a once in a 5-year opportunity for us to actually get some good growth.
Well, I think the impact on consumer sentiment is critical in this regard, because over the past couple of years, consumer sentiment has been quite poor, because they've looked at events in Europe and said, Europe is next door to Australia, it's going to hit us immediately, right? The Australian consumers did not appreciate how well they had things. Over the last 12, 18 months, that consumer sentiment has actually improved. Now, if consumers perceive that they are going to be significantly worse off, then that will be an adverse outcome.
Okay, one last thing. Michael Knox advanced the idea that it's possible, if this budget doesn't tick the boxes that we are moving in the right direction to get the deficit down, to contain the growth of debt, that debt rating agencies could hit us with a downgrade. How worried are you about something like that?
I think there are a lot of other things to worry about.
Yeah. Paul Bloxham said the same kind of thing.
So
you think our overall debt position in the eyes of the world and debt rating agencies, we'd have to do a lot wrong before they downgraded us?
Exactly. I think what you've got to look at is a debt rating is, yes, it's an absolute, but equally it's a relative rating. And so what is the chances of Australia not repaying its debt relative potentially to other countries? Now, on that measure, Australia is very much at the right end of the scale and right up the top.
Yeah. I do recall at times, I think in the 80s, where I think the Hawke-Keating government did actually lose a AAA rating. But the point was always made that they can just raise taxes and get the money and pay back the debt.
Exactly.
Yeah.
Exactly that. That's the benefit of being a central government.
And that's right. And also having an economy solid enough to actually be able to suffer a rise in taxes. However, we don't want a rise in taxes next week.
No, and we don't want a country downgrade.
No, exactly right. Michael, thanks for joining us.
Okay, thanks.
After break, when is a tax not a tax? We'll talk budget with perhaps the only economist in the country who thinks a debt levy isn't such a wrong idea. Terry McCran joins me next.